You said something interesting there that I think is a good segue because you talked about Novo Nordisk and like entry points, and you're right. Like I bought Novo Nordisk in my retirement portfolio and in King of Jungle portfolio, and the stock is down from there. I'm still very happy about that. I actually added to it in my retirement portfolio fairly recently. And your point was good that like valuations and entry points do matter. And as a long-term investor, I used to poo-poo this stuff and just say, well, look, I want to be an owner of this thing. But it does make sense to use short-term technical indicators to just, if you want to buy this thing in the next month, maybe you try and find the right day or the right hour of the day to get into it. So you're going to give us a bit of a masterclass on one of your favorite tools, which is TradingView.
Okay, yeah, it's actually less a masterclass on TradingView and more about where long-term investors need to start. So listen up, beasties. I'm going to take the long route here, just establish the proper context. Let me read the question that came our way. Monkey, I know that a lot of technical analysis is done using TradingView. Is there a quick and easy filter that you'd recommend to immediately get a rough idea of support and resistance, to get those layouts you often share? Okay. Warning sign. And this speaks to the common critique of traders from the perspective of long-term investors. It is incredibly easy and tempting for anybody that starts doing this stuff to immediately start clogging charts with all of the patterns and the lines and the fugazis, you know what I mean? And I am deliberately going to say no. We're going to start with the fundamental thing you need to do, and it requires basically nothing. It really requires very little. So down the road, I will provide more layers and more fancy gizmos, but not now. Here's the first thing you need to learn to do as an investor. Recognize what game you're playing. You've heard me say that endlessly, correct? In this moment, I'm speaking from the perspective of somebody that is investing in the company. So they are not buying it to swing trade it. They're not buying it to day trade it. And they're certainly not buying it to scalp it. Scalping means like sometimes exits within minutes or seconds, right? That's none of that, right? You actually did your DD, you understand the company, and you want to buy it. That's the context, right?
That's a good framing, because you can use these tools and this mindset in both of these ways. One where like a lot of the guys on Reddit or true short-term traders, they don't even care what the company does. They've got no interest in the business model. They're just looking at like price, essentially like the price and a bunch of other stuff and moving averages, and they're trying to like they win in their mind, I suppose, if they're say long, because they might be long or short. If they're long, they're trying to buy it for, let's say, $10, and they're trying to sell it for $15, and then they're out. Like they made their 50% profit, and they want to do that over like a short enough period of time that they can keep like recycling that money.
Right.
But if you're a long-term investor, like you might use these tools to find when to buy, but your intention is still to be then at that point become a long-term holder. You're trying to turn $10 into $10,000 over like a long period of time.
Right. Okay. So I'm going to introduce two key ideas first. Number one, before you use anything that you consider fancy, all you need to do is open up a stock chart. I use TradingView because it's just the most slick platform for this kind of stuff. It's a perfect complement with Fiscal AI, by the way. Like those are the tools, like Fiscal AI for research, TradingView for looking at the mechanics, right? All you need to do is put it on the monthly view. I'm going to go deeper into the different views and what they're used for, the different time zones. But on the monthly view badge, you see very clearly, just using your eyes, one fundamental thing. is the company over the many months, so usually you're now looking at years, is the company's price gone up? Has it gone down? Or is it going sideways? And it's just incredibly clear. Okay? So, Badge, you're looking at this chart, correct? Of Global Water Resources. It's a company. I have no idea what they do. I don't care. But this is just a perfect example of the first step. Looking at this chart just visually, from the beginning of the candlesticks to where this photo was taken, late October, mid-October, how would you describe the direction of the price?
So I guess if we're looking, well, okay, so this stock was kind of doing some stuff, and it started to decline between, say, on the picture you got like November through to about early April, and it looked like it'd been a massive down, and then it took it dropped off a cliff, and it seemed like it was trading at like a much lower level, like $10, and then as the image was taken, like I guess a few days or weeks before that, it suddenly jumped back up to like its previous kind of range.
Right. Okay. So I would say in short that the movement here is down for the first half of the picture approximately, then sideways, and it ends with a very big, massive up. So momentum wise, if we actually disbar that very last jump, I would say the momentum is down in general, down and now down and sideways. So first important point is, only knowing that, I would not be tempted to invest in this. Why? Because going with momentum is easier than fighting it. So that's point one, and that's visible here, right? Now,
because again, this is something I always used to like poo-poo and just say like the past doesn't predict the future. But you said something on the Patreon when you were fielding this question just like 24 hours ago, and it made me go, actually, no, you're right. There is actually something to this. It's not just like magic. And I think your point was like the institutional investors, they trade with momentum. So if you've got like a large part of the market that is going to follow like stocks that are ascending and buy into them and sell stocks that are on a down, well, that's like a self-reinforcing mechanism. So, you know, even notwithstanding everything else, like I don't like to use this stuff because I like to look at the business fundamentals. But if you put all that stuff aside and you're just looking at like the picture, there is actually a good rationale for why things will typically move in the same direction that they're going.
yeah, and to add to that, Badge, I'll say it more directly and to the point. What retail investors don't actually understand, or maybe it's not they don't understand, they don't feel, is that the vast majority of volume of trading every day is done by robots and quant shops. So it's literally, call it software programs that are reacting to price movements that have nothing to do with anything besides price and these complicated algorithms and patterns. And so this is the information that the quants and robots are using. And so from that perspective, nothing else matters but, how the algos are going to play against each other. Anyhow, for our purposes, Badge, this is this is mostly, you don't want to enter this company, right? From just the way the movement is going. But here's lesson 2, and this is returning to the initial question. Something happened here that was worth noting. And I already sort of did the work for you or for our viewers so you could see it clearly. Do you see that blue line basically in the middle, right? That is essentially the only line you need to learn how to draw for yourself, and you do not need any tools. This is why I'm kind of answering and not answering our patron's question, because this is something you do with your eyes. and it's not that hard. Do you see that during that phase that was kind of on the left half of the chart that was basically going kind of up and down, but essentially downwards, that there are 1, 2, 3, about 4, 5, 6 points where the lowest price hits that blue line and then goes back above it, and then it hits that blue line again, goes back above it, hits that blue line again, and goes back above it. In that instance, that is called support. Because if you think about it from the quant way, it seems like historically, anytime it touched that price, buyers came in. Or put it this way, the robots were programmed to start buying more as soon as it hit that point, right? So makes sense, called support, right? Then, follow me on this. At one point, kind of halfway down this chart, what is that, like late March, between March and April, right, on this graphic, all of a sudden, call it a bad thing happens, right? Let's call it fundamental wise. This is global water resources. Somebody pooed in the water, right? And
if we look at the chart, right, it's probably like a quarterly earnings, because like every 3 months, US companies issue like new set of fundamentals, and that causes everybody to kind of, do their due diligence again and revalue the company again based on latest earnings.
Yeah, and but for our conversation, it could have been anything, but fundamentally something changed, right? And something that was bad, right? So all of a sudden, that moment where the bad thing happened, we broke that support line, that blue line, right? And notice, this is what's fascinating, is that even without knowing why, for the remaining months or weeks, the price went sideways, and then in a couple of moments it approached that blue line, literally touched it. This is the kind of like when technical people say, look, this is not coincidence. There's that one point on this line, July something, where the highest price literally touches the blue line and then goes back down. So then it stays below the line, and then we get to the very last candlestick at the end. But you can basically see this chart is divided into two halves. The times the price was above the line and the times it was below the line. And that is called the support/resistance line, right? Think of it this way. That line is like a magnet. The algos are drawn naturally over time to that line, and depending on the fundamentals, they will continue, call it testing that line, right? So if you are a trader, if you're thinking of owning this thing and you could see that there's not enough, call it good news to say break that line, then you don't want to buy in because there's not going to be enough juice to kind of break past it. And this is why I picked this photo. What happens now, whatever it was, October, right? We see that now a good thing happened, right? A good thing happened, and we're back exactly at that line again. So if I'm now thinking of owning this thing because I've done my due diligence, I am not going to buy yet. I don't actually know what happened. We could probably call up the chart and figure out, right, whether it's now above or below the line, but we don't need that for educational purposes. If I'm thinking of buying this right now, I'm asking myself one question. When it hit that line, did it then go back down, below, or did it actually break that line and go above? If it went below, I'm now not buying it still because nothing about the momentum changed. That line is still resistance. It still doesn't have enough juice to break. But if the fundamentals were good enough and it broke that line and one of those candlesticks now closed above that line, that is when you enter, because that that resistance line in technical trading terms became support. So TLDR. You gotta do two things. Get on the monthly view, see the momentum direction. 2, all you have to do is train yourself to draw one of these lines, and you do it by literally looking at where the candlesticks touch. You draw your line, and then you wait. Then you exercise patience. And you get to this moment where it gets tested. If it breaks, then that's your go. If it goes below, that's your not yet signal. How's that sound? Right. I mean, this is a little bit of where the art comes into it. A lot depends on your understanding of the company, and obviously, depending on the frame you want to use. The more information you have, meaning the more data points, meaning the longer the time zone, the more sturdy that value, is worth. If you're long-term investor and resistance breaks into support finally after, call it 4 years, that is really, really valuable data. But if you're doing more of the short-term thing and you're only looking at a couple of weeks, that could be just more short-term trading games, and you can't, that signal is nowhere close as valuable as the zoomed out picture. But I'm glad you asked that, because we're going to do round 2 of this exercise. This time, we're going to go live, and I'm going to show you another chart. This one is very important for our community because it's one we're discussing and where I did a little charting stuff on my own. And I'm going to ask you to tell me what you see here. And we're going to see how good Badger is with crayons. Badger plays with crayons. Okay. So, pop quiz, Badge. Here's how I thought I would ask you this question. Can you see the numbers okay? This is an actual live view of my TradingView watch list. So all Monkey's companies that he's looking at are, the tickers are bouncing up and down, but the chart itself is of Novo Nordisk, right?
I can see that. Yep.
And I want you to, as best as possible, zoom in so you could kind of see as finely as you can. I want you. Here's what I'm asking you to do. Draw for me 2 lines. So this is just visually. This is again, this is not more complicated than using your eyes. And if you had to draw 2 important lines of that support resistance levels, where might you draw them?
All right, sure.
There's actually 3. There's actually 3 you could draw, I think, pretty easily. But
for one, right, this is not the weekly view which you talked about, because I can see this goes back to like 2014. So
this is the monthly view, right? So I'm glad you mentioned that. This is right. This is, you're looking at the price history of Novo Nordisk for basically the last 10 years. Right. So this is for long-term investors, which are that's our gang. This is the chart that I would highly encourage everyone thinking about buying Novo to look at and draw these 2 lines or 3, depending. Where might you put? Start in the, call it the back half of the timeline, Badge. So from
I get it. Yeah. All right. So, like, if you're on the YouTubes, you might not be able to read like the little numbers. So apologies for that. But I guess over this 10-year view, it feels like, where it kind of bounced up and down. Is that like 28 to $32, something like that? That's kind of where you are now. Yeah, exactly.
Yes, exactly. Yeah. Right. If I'm drawing a line here, this is where I would do it. Right. Whoops. Damn it, my crayons aren't working. But you see the white line right here?
Sorry, just going to say quick edit. When you face that way, you're pointing away from the mic. We can't hear you.
Oh, oops.
Yeah.
Here we go. There we go. I added. That's where I would make the first line. See that new yellow line? Right here? And you could see that at the beginning, all of these months, right? It was touching it and going below, touching it and going below, right? So somebody thinking of buying Novo around here, right? Their patience would be rewarded if they withheld, because it kept trying to go above this line. And at every point, it basically says, nope. And then it goes back down, right? And then trades below that line for now several years, right? See that? Now, all of a sudden, something happens here. What is that? we're talking about 2020,
It's
right?
COVID. That's COVID. It's 2020. That's the COVID pandemic. That's like
Exactly.
suddenly, yeah.
Right. So it was right about here where you see my cursor right there, where on the monthly chart, it finally broke that resistance line and that line became support. And this would be your tell to after your due diligence, after your fundamental understanding, this is when you buy right here, right? And turns out after this candlestick, now we're going way, 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 way up, right? And now, right? And then now you're golden because that line did its job, right? Okay. Let's keep doing this, but add one more line that's now more relevant to today. Where might you put that line?
Yes, I think I can see what you're hinting at. So if we come down a bit, like early 2022, it looks like it broke your yellow line, and then it kind of found like a new like range there. Yeah, that little section.
Yep.
Which we're now back into today. So it's kind of come. So go on, draw like another line somewhere around there. Yeah.
Yeah, exactly. This is, you could see, right, that this box here doesn't always need to be lines. It could be a box. This became like a range in which the price touched this point here, right? And then kind of drifted towards it. But this is the line, right? This is the line that is the lowest price at which the robots then said, nope, that's as low as we're going to go. Right? So I'm going to draw this line here. This is our second line, right? And of course, the momentum took us hugely high up. So if you were looking to buy here, you have every technical green light imaginable, right? Because the momentum is straight and up, and it's not even confusing. That's why this chart is great to look at. There is zero confusion about whether you're going with momentum here, right? Now it turns. And any investor basically deciding to buy here after the turn is now swinging against the current, right? And that, shockingly, because this is was a $400 billion company, right? Or higher, that momentum completely reversed. So here you would be going against the current, obviously, right? So you would have to be saying to yourself, you know more than the market because you're in whatever. You're just that smart or you've done your due diligence, right? But momentum takes us all the way down. So it's not a good time to buy. And now this is why this is fascinating. We are now exactly at the point of the previous support line right here. And we see where my cursor is here. This is, I think, when I first made this chart for Wall Street Wildlife, when we were talking about, getting into Novo. And at this point, I said, not yet. Why? Because we got the touch, right? We got the touch, but that trend never really developed. So here actually let me take that back. Here might have been like a decent point where you could say, if you trust your due diligence, it touched this line. You're like, okay, you're betting that the momentum is now reversing, right? So if you believe in the company, this wasn't a bad place to say, take an initial bite. That's what I would have done. Take an initial bite. But here we see that, nope, that's not, it just didn't, it's reversing now. So the real momentum did not change. This was, let's say, hopeful news that didn't pan out. But it's this moment here that now I'm really interested in, because we're back exactly at that line. And if I'm thinking about investing in Novo, and this is the TLDR, I am going to wait. Right? I'm confident in my research. I get it. I want to buy more shares here. But it's not until we see what happens at this point that I'm going to buy. Because if we break down below this line, the momentum still continues to be down. You'll be fighting the algos. It's going to be the catch and falling knife phenomenon, right? You're not going to beat. Your purchase of however many shares are not going to overcome the algorithmic force that is down. But to the contrary, if we see this touch this line, and now the price starts bouncing above it, that's where I would say, okay, now you can buy your initial, call it third or quarter, right? And monitor, because if it then starts drifting up again, now you keep buying. Now you have more confidence that this line will act as support and that things are actually turning momentum wise. Break down here, and we have a shot actually at drifting down, way down to maybe this next line, because this looks like it could be another line from history. It might drift down to 37 in terms of.
Let me jump in because I'm kind of reluctantly with you on this journey. I sort of see something in this. This is not something I ever intend to use as part of my own process, but I kind of see what you're pointing at. But if you tell me that in, say, 2025, 26, that bottom line you drew, like the $29 line, has
this one?
any relevance in any way today, because that was like, in your lingo, like a support line that was established back in, 2015 through 2020. Like, this is not the same company now as it was then. And so in the real world, if you take all the mystical stuff out, there is no reason why what it did 5-10 years ago will have any bearing on the company today.
Right. So great. Let me address that point. You're absolutely right, Badge. Because this is such a long view, we're talking about a decade here. Anything that happened like way, way, way before has less value, call it, or less weighting than whatever the new levels are. So you're absolutely right. So, I mean, I'm talking about like a holistic picture, right? So yes, ignore those initial lines, and we could just cut this chart in half and just look at, let's say the last 4 years. And that's why the main thing I would say is look at it's this level now, the 45-40 level. That is the main line, the one line you need to pay attention to. Having that deeper understanding of the company's history, and that's just another data point. But yes, absolutely, you now weigh this line right here way more heavily. And let me finish this little school segment, Badge, with one important I think behavioral tip. You and I always say that to be a successful long-term investor, you need to cultivate the virtue of patience, right? Patience is maybe the hardest thing, right? And it differentiates winners from losers in all kinds of ways. When you actually get used to doing this kind of thing, and you stop thinking of it as, and you don't actually, let me put it this way, you don't overcomplicate it by saying you don't start overlaying it with more mumbo jumbo. Then all it's asking you to do in a moment like this is be patient. Just wait a little bit longer, and you will know whether the price is going to keep going down or whether it's going to start going up. And if it keeps going down, wait. Patience, grasshopper. If it starts going up, yes, you're going to pay a little bit more, right? Because it started going up, but your risk goes down significantly. And that's kind of how really successful long-term investors do their business, right? They'd rather buy a company that's already excelling. It's already demonstrating the goods. And yeah, you pay a little more, but now you're reaping the benefit of excellence. Same thing here. You want to wait until the momentum is more clearly on your side.
Okay, cool and all. And this is like another skill set you can overlay, because ultimately you and I are long-term investors, and we look at the fundamentals. And let's not confuse anybody that we're like technical trading guys. We are not. And you use this stuff as like an add-on to your long-term skill set. Now, you said they're like successful long-term investors do this stuff. Well, they don't all do that. Some do. And some successful long-term investors completely ignore this stuff, right? And like I want to sort of defend just for a minute why I think you can completely ignore like all this price action and all these charts and graphs, and like a downside, what can go wrong? Because if you're not disciplined and you don't have the experience born of like decades of doing the stuff, then your emotions are going to take control. And so let me just give you an example. You drew your support lines and you're like, okay, I'm waiting for the momentum to turn. And if you're really diligent to the sort of the approach you just outlined, well, when you see enough on your weekly chart that you're like, okay, or monthly chart rather, like, okay, now I can buy, and then you buy, great. But if you're not disciplined, or you don't really, you don't have the courage of your convictions of that full technical trading skill set and your long-term skill set, well, you might find that you feel you've missed the bottom. And you're like, okay, well, it's going up, but I'm just going to wait for it to come back down so I can buy. And this is a trap that newer investors fall into all the time, which is they anchor on a particular price, they try and time the market, and they try and sell, and then they hope they're going to rebuy. And if they miss like that, one golden day or minute, wherever you're looking, where they didn't catch like the very bottom, they just kind of never rebuy. And so I'm not saying it's going to happen to you every time, but if that happens to you sometimes, well, that's how you miss like opportunities like Rocket Lab like a year and a half ago. If you didn't get in, it was down at like $3 for a little while. I was just sort of buying and owning and adding at between sort of $3 and $4 and $5. But if you say it got to like $6 and you're like, oh, I'm just going to wait for it to get back to $5, and it never does. And that, it was briefly like a $70 stock and it's now like a $50 stock. It's going to fluctuate wildly, but we're probably, barring like a very, very serious like destruction of the company, we're probably never going to see $6 again, right? And you just miss like a life-changing investment because you're quibbling over a couple of bucks when what you just want to do, if you want to keep it simple, I'm not dissing everything you've just told us. I'm just saying you don't have to do that. If you want to keep it really simple, you find incredible world-changing companies and you just kind of buy them at almost, I'm going to say at any price. I don't mean at any price because something like Palantir is like an insanity level valuation, but you buy it at any reasonable price and then you just kind of sit back and ignore it for a decade.
Yeah, I think we're talking about, now we're getting into medium/advanced level things. And there's multiple skill sets that as you get better and better, you can use simultaneously. So it depends on what audience member we're talking about, right? I think for a beginner, I think you're right. If you want to keep it as absolutely simple as you can and expand your timeline, then you say to yourself, timing doesn't really matter to me because I'm happy to wait 10 years. If you're more in that medium advanced grade, you'll say, you know what I might do? I might break this purchase down into thirds. And my first third is going to be, let's say now, because I did my research, but then I'm going to hold off on the second and third and try to go with the momentum. And if I miss it, then I already have a third and I look at the chart again and sure, I missed 10 percentage points, but reminder, now the momentum's going the right way. It's time for the second third, so you got to know yourself, of course. And you did mention that it is a question of discipline and it is a question of being patient. And I think all investors should cultivate those attributes but different games for different people.
Yeah.